Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, September 20, 2012. Well, a change of trend back to the downside today, and the candle has made a lower high and a lower low. Previous day's trading we had a change of trend to the upside that wasn't supported by the buyers. Today we have a change of trend to the downside that's no longer supported by the sellers. Throughout the trading day, the sellers were strong enough to take out the low of the previous candle and the candle prior to that, but the sellers lost commitment as they tested down towards the Tenkan-sen, which offered itself as very strong support for this market for today's trading. We had the buyers come back into this market, close the market back up towards the high, for the buyers to close with control of the market today. This does set the market up for a potential change of trend back to the upside, and we also have a candle where we have no body on this candle, a doji type candle, or a body with a very small amount of body, a candle with a very small amount of body, small black body, denoting the sellers making some minor amount of net bearish progress, but certainly not enough to be significant. So a day where neither side has really made any significant net bullish nor bearish progress. But the significant factor here is the very large shadow on the bottom of this candle, representing the sellers losing commitment, and that's not what you want to see in a candle that begins a downtrend. And with the market closing up towards the high and the buyers closing with control, and it has set this market up for a change of trend back up to the upside. Now that change of trend back up to the upside, if we do see it, we'll see a breakout from this small congestion area pattern that I've highlighted here with the yellowy colour. It's not quite a flag, and also not quite a downward sloping wedge. We have the two boundaries slightly converging, but the ramifications are the same. We have this congestion sloping against the prior uptrend, and it's more likely to be a continuation pattern than to be a corrective pattern back to the downside. The fact that the market is trading above the Kijun-sen, the Tenkan-sen, and all of the and the cloud, all of the Ichimoku indicators suggest that the market is bullish and that the breakout will likely be to the upside. We can have a target on this pattern, basically the extent of the trend leading into the pattern projected up from the breakout, and that would be roughly from 1430 up to 1474, so about 34 points from 1462, which would give us about 1490 something, so up around the 1500 round number level would give us a target if we do see the breakout and the close above the pattern. The thing with patterns is that we don't only need the breakout above the boundaries, we also need the close above or below the boundaries, so that would be significant if we see that. But what we'd also like to see, if it does occur to the upside, would be a bullish breakout, and that would offer more confidence in the market testing to higher levels. Now, in terms of peaks and troughs, we don't have any major areas of resistance above where the market's trading here within this pattern. The 1474 swing high will offer itself as resistance, and to a degree this area around the 1460 to 1465 level where the market's been trading for the last 3 or 4 days. But if we can break out up above there, then we certainly could see the market testing up to the round number 1500 roughly fairly quickly. In terms of the Fibonacci extension, because of the market ranging and congesting within this this pattern, we only have very small trends to use with our Fibonacci ratios. But here we've seen the market test to the 100% level to the 61.8% level, and test through there and be rejected from there, as well as the 50% and the 38.2%. So quite a significant test below, and very strong price rejection from these lower levels does set the market up for that potential change of trend to the upside. Also, in terms of the Fibonacci retracement, we've only had a one candle uptrend, and now we're examining the relationship of the current downtrend. And interestingly, here we've seen the market test exactly to the 161.8% level at 1450, which coincides with the area that the Tenkan-sen is trading in, and it does suggest that that is very, very strong support for this market, and then there is strong potential for a change of trend back to the upside. In terms of Ichimoku, as I've already mentioned, a bullish market in all three timeframes by trading above the cloud, above the Kijun-sen and the Tenkan-sen, and the Kijun-sen is pointing flat, so price action has been attracted back towards that flat Q trend line. There is still a possibility that we could see price action attracted back towards there, so we do need to be aware of that we could see the trend continue down, and let's watch that. Let's watch the lower boundary here for a potential breakout to the downside. There is potential for this congestion area to be a reversal, but more likely, as I've mentioned, to be an upside breakout and a continuation pattern. Just looking at the Tenkan-sen, as I've already mentioned, that has held as strong support for this market today, and very, very strong support. We can see the large amount of upside price rejection as the market tested to that level. So that will be significant for tomorrow as well, around the 1450 level. Down below there, between those two Ichimoku indicators, we have the support at 1440, which was previous resistance in the near past and prior to that as well. And just looking at the Chicago span here, that's confirming this bullishness that we're seeing in this market as well. So overall, a bullish market. We are congesting to a degree, attempting to retrace this higher time frame uptrend. The market isn't doing a good job of it. We had a change of trend to the downside, but it's not supported by the sellers any longer. There is very strong potential for the buyers to come back into this market and to change this trend to the upside. That would potentially give us a breakout up above the wedge pattern or a flag pattern, and a potential test to around the 1500 level over the next week or so.